Let's talk about market capitalization and market value. What's the difference? Hello, I'm Rachel Jones and you're watching Kalkine Media. Two terminologies that newbie investors often mistake for each other are market capitalization and market value. Although when you spend time investing, the difference between the two terminologies quickly becomes apparent. Typically, investors give a high-level importance to market capitalization while selecting stocks. Essentially, market cap refers to the total value of the outstanding shares of a company. It is calculated by multiplying the total number of outstanding shares with the current value of a share. On the contrary, market value is a broad term encompassing several market indices, such as price-to-earnings ratio or return on equity, for example. Market value is a more volatile concept as it can be influenced by a range of factors. Before charting out their differences, let us first glance through both these metrics individually. One of the most efficient methods to gauge a company's standing in the financial market is to look at its market capitalization, an equity-based metric. Essentially, market cap reflects the value of the total outstanding shares of a company. So to measure a company's market cap, it must be a publicly owned firm. To find out the value of the floating or outstanding shares of a company, two methods can be used, namely the float method or the free float method. The resulting figure derived from the calculation is used to categorize stocks into small cap, mid cap, and large cap companies. Generally, companies holding a market cap under $1 billion are considered small cap. Those holding a market cap between $1 billion to $10 billion are called mid-cap companies. And finally, companies with a market cap of $10 billion and above are considered large cap companies. Investors often hold the notion of large cap companies being a safe haven. On the other hand, market value of any asset is the price that the asset would be valued at in the market. Any security or asset that can be traded in the market has a market value equal to the price received in exchange for it. Indices used to calculate the market value of a company depict more than just information on equity. Some of the commonly used metrics that depict the market value of a stock include price-to-earnings ratio or price-to-sales ratio, for example. All these indicators use information about the equity as well as other additional factors that impact the stock. So where does the difference lie? Well, to get a better perspective, market cap can be classified as one of the components of market value. Additionally, market value is more susceptible to changes in the market than market capitalization, depending on the factors it may include. Additionally, any sectoral changes would be highly reflected through the market value, but not as realistically through market capitalization. So to recap, though both market capitalization and market value are useful terms used to gauge the health of a stock, they reflect different aspects. Investors should carefully understand the difference between these metrics before choosing the appropriate stocks for their portfolio. Now, if you like this information, please like, comment, and share, and click the bell icon to get notifications for our latest videos. For more information, you can log on to our website, kalkinemedia.com. I'm Rachel, signing off for Kalkine Media.